Well, Alan,
Yep, I can hear you
can you
now.
hear me?
Yep, go
Okay,
ahead.
perfect, perfect. Well, first, thank you everyone for joining the meeting tonight. As Alan has mentioned, we're seeing a lot of activity over this past few months here, particularly as the rates have dropped. So we're averaging a good amount of deals per week, and we definitely want everyone involved. I get a lot of questions along the way. I get a lot of people who, as Alan mentioned, try to call me sometimes, and we're busy in the background just trying to get these deals done. So if you need anything immediately, please feel free to text or to email or leave a message. I'll be certain to get back to you. But what we're seeing in the market, as you all know, the rates have been dropping. We're seeing a rise in activity as far as the cash out refis, as far as purchases. The DSCR is a hot topic right now because, as Alan mentioned earlier, a lot of investors were sitting on the sidelines, not getting involved. They were just waiting for this moment, and there wasn't a lot of activity. We didn't, as far as the investors, and we deal with investors because all our loans and deals are geared towards investors. And so a lot of them were sitting on the sidelines. And now with the rates coming down, a lot of activity, a lot of investors are submitting applications. We're getting a lot of deals closed. And so wanted to kind of set the expectation with some of the deals that we're seeing. A lot of questions come my way with regards to, as Alan mentioned, why they don't close, what we need, how long it takes, and so forth. So I thought I'd take the top three questions that I have received over the past, I guess, number of weeks and just kind of flesh that out a bit. As far as the number one question I get, what docs are required? That's we try to do these lenders that don't require a whole lot of documentation. So if you're interested in finding out specifically, just send me a quick email. I'll send you a list. I'll go down the list real quickly now. But if you need something in writing, please feel free to reach out to me and I'll email that to you. But as far as the DSCR loans, it's pretty simple. We don't require tax returns. We don't require a lot of things that income verification wise. We try to streamline it and keep it simple. We need things like the ID, we need a purchase contract if they're buying a property. We need a HUD from the purchase if they're refinancing. One of the biggest things of bank statements, getting that ahead of time saves, as Alan mentioned, we're closing deals in about 25 to 35 days, but we can do it even sooner if we have everything lined up already. So across the board, these loans fall into two things. It's pre-underwriting and underwriting. And pre-underwriting is us gathering the documentation, getting what we need, making sure everything, all the boxes are checked. And that includes things that may take a little while to get. So sometimes bank statements, if you tell your borrowers we need at least 2 to 3 months of bank statements up front, we don't have to wait to get them, while it goes through underwriting. Things like corporate documentation, if they have an LLC, for example, we're going to need the LLC docs. We're going to need articles of organization, operating agreement, tax ID, those kind of things. So again, these are things that we suggest that you tell the borrowers ahead of time to have that ready so that by the time the file goes to underwriting, everything's already in place. But things like the rental agreement too. If the property is rented out, we need a lease agreement. We need proof of rental income. The lenders now are checking to see if the landlord is getting that rent. For example, if you're saying this is rented out to Mr. Jones, for example, they want to see at least 3 months of 2 to 3 months of rental income being deposited somewhere. So those bank statements are important because they actually tell the lender how much money this borrower is working with because there are liquidity requirements that the lenders require. They want to make sure that in case the tenant drops out or stops paying, they can still carry the loan for a number of months. And there's also they want to see where that money's going. So again, prep your borrowers for that as well because the lenders want to see. And then the reason for that, of course, is hey, if I can create a lease today and say I'm renting to so and so, but where's the proof, right? The lenders want to see proof that their rental income is going somewhere and that the landlord is actually getting that money. And that's basically it as far as documentation. Again, I get a lot of questions about that. I'm happy to share a list with anyone who wants it. I can email that to you or text it to you if you'd like. Again, just to make sure that everyone's prepared ahead of time. The second most asked question I get is how long does it take to close? I think Alan referred to that. It takes about roughly 3 to 4 weeks to close, but a big thing is how fast we get those documents in. I can't tell you the frustration I get sometimes when we tell people, hey, this is what you need, or 10 things you need. Here's a list of 10 things. and it takes them forever to get it to us. And that delays the closing. So something that could have taken 3 to 4 weeks ends up taking maybe 8 to 10 because the borrowers are just not responsive, or we just can't get what we need. And so that is again a point of frustration for me personally, because we want to move quick and get these deals closed. And of course you do too. The quicker you close, the more money you make, and the quicker that money comes. And so getting those docs in order as far as what we need is really crucial. And understanding too that I know there's also some people that get frustrated because the lenders kick back with more requests. And I think sometimes we have to understand that in the pre-underwriting phase, we're collecting documentation, right? We're getting everything we need on the preliminary basis, which is the documents I mentioned before. Once the appraiser comes in, once the credit report comes in, once the title comes in, there may be some other things that the lender is going to require. And that's a whole another set of lists, another list of documents that, again, we may not have known about until, because we didn't have the credit report. We didn't have the appraisal. We didn't have the title work. So these are things that I would call a second wave of documents that we may require. And again, prepping borrowers for that is important, because I think sometimes they feel like, hey, I submitted everything. I have all these documents. You want more? You want more? Well, hey, if you let them know ahead of time that this is kind of in two phases, right? Pre-underwriting, where you were going to ask for these documents and we need them. And then once we get the appraisal and credit and title, we may require some other things. That kind of gets them in the frame of mind that, hey, okay, I'm expecting that. And it's not, you're not frustrated with that. The third question I get a lot of is why deals don't close, which is what Alan mentioned earlier, as far as touching base on that. Deals, a lot of deals that I'm seeing, we see deals not closing because of three major things. Valuation. I think sometimes the borrowers expect their property to be worth more than they really are. As you know, sometimes they may say, hey, my property's worth 500,000. The appraiser gets out there and it's only worth 300. And that happens often. And so expectation. We can also, a lot of times I go online to kind of see what the values are. You can get a good sense nowadays between all the websites that are out there, from Redfin to Zillow to Realtor.com. I mean, there's a number of sites, even tax base, whatever the county or city that property is in, you can look at the tax base to see, get a sense of what the property is worth. And you can get a good idea. A lot of times, again, they may say the property's worth 800,000. We come back and I look on Zillow and it's only worth maybe 400, right? And now, not to say Zillow or these sites are always correct, but that does give you a sense of, is this realistic or not? Also, as Alan mentioned with DSCR, they look at rental income, and so that affects the loan amount as well. The property on paper could be worth a lot of money, but if it doesn't rent, let's just say the rental income is too low, then they're not going to get the loan amount they're expecting. So there are a couple of things really we have to let the borrowers know about, because that loan amount may come down because the DSCR just isn't there. Even though the property on paper, if you were to look at the comps and everything else, makes sense, but just the rental market, for whatever reason, just doesn't meet that DSCR requirement. Credit score is another big one. People sometimes, we only go by what they tell us, right? They tell us you got a 720 credit score. That credit report comes back and it's really a 600. We have a problem, And so these are things that unfortunately, we can't look at their credit score until we get their permission to pull credit. So it's hard to kind of gauge what that is. And a lot of times we put in the work. We actually go through the whole process, collecting all documentation, get everything in order, and the credit comes back too low. At that point, where we can't move forward unless they get a co-borrower or somebody else that can step to the plate and be part of their LLC, or just be a co-borrower with them, a co-sign form. It's going to be tough. So between evaluations, credit scores, and also documentation, the lenders, I talked about the second wave sometimes. For example, the credit report comes back. There's also the credit and background checks. Say the credit report comes back and there's something on their credit report that they need to explain. Well, again, that goes into documentation, right? We need that explanation. Can you provide it? We've had deals stall because the people have not provided letters of explanation. They can't provide documentation. The lender wants, hey, they want something extra to prove what they're saying, and they just can't give it to us. And so that also stalls loans or kills loans sometimes, because they may come back with the documentation, but the lender may have closed the file. And so that happens too, where lenders just get tired of the file. They're tired of dealing with it. And they also feel that the person's serious about the loan, they provide that documentation in a timely manner. So if they're taking a long time, they're either lying, they're either being hesitant, or they just are not responsible enough. And so they kind of say, well, forget it. We don't want to do it anymore. And that can kill a deal as well. So those are some of the top three things that we're seeing at least that can actually prevent the deals from moving forward. And lastly, I'd like to point out on some of these small deals. I know that's another question we have sometimes. We have a minimum now of about 100,000 or more. We used to do small deals, and in some cases, rare cases, if the person's a repeat borrower, there's a certain special circumstance, we may do them. But smaller deals are getting harder to do because only a certain amount of lenders will actually touch them. Any deal less than 100,000 becomes a little bit tricky to do because lenders want to see higher loan amounts, at least 100,000 or more. If we get into the loan amounts that are smaller, typically the interest rate is going to be higher, the points are going to be higher, the LTV will be lower. So it just become a bit cumbersome to deal with. So as a result, we're trying to set in the minimum at 100,000 or higher. Again, if you have a loan that is from a client that you're trying to get business from, or a repeat customer, or someone that you feel is going to be someone that's going to come back to us, then we can talk about that. But as a rule, these deals are typically harder to do, put a lot of time, effort, and the revenue, to be honest, when it comes down to it, is not as lucrative as some of these bigger deals. And so between the time we put into it, the investment, and and again, having to find a lender that will actually touch it, it becomes a little problematic. So as a result, I get these questions a lot about smaller deals. We're kind of taking a hands-off approach on some of them, unless, again, it makes sense to do so. And that's all I have, Alan. If anyone has any questions, feel free to let me know.
I see Andre's hand is up. Andre, if you need to ask a question, you need to unmute yourself. Okay, if not, oh, and I want to share with another thing, right? So probably, George, you can touch up on this also. Um, you know, the main difference working with us in Sequoia versus a traditional lender, I think the biggest difference is that our lender is very willing to push the envelope to get things done for us. We just closed one. Well, actually, we just closed two deals. Very difficult. Okay, one deal is actually in Oregon. It looks like a farmhouse. It has a house in it. It has a house on the property, but it also has a storage room, a storage building in the back. So to the lender, it's quite difficult for them to consider what is this? Is this a commercial? Is this a residential? So on and so forth. So our lender, after endless meeting with the lender, and they are willing to get exception for us. And George, would you like to talk about this one? I mean, this one is, I think, it's very classic with Samuel Steel out in Oregon.
Yeah, it was a deal where it was actually turned down initially, and this is again one of the things where Alan mentioned coming to us. We have relationships with these lenders where this borrower had a hard time placing this loan because it was, first of all, considered rural. There was a barn on the premises what actually has hay in it. And the reason that's important because, and I didn't know this before, but hay typically indicates agricultural. And so that was a no-no for a lot of lenders when they looked at the deal. And also they were renting out the barn, which meant that it was not purely residential. So there was a lot of components here that lenders were just hands off, particularly being rural and particularly being agricultural, at least with a barn. And so it was declined initially, or we were able to actually discuss some of the things with our rep. The rep took it back to underwriting. Eventually, we got it approved, which was a big win because again, she had this particular bar had been out there looking, couldn't place it, and we were able to actually, with our connections with this particular lender, having to re-review it again, take a look a second time, and come back and actually get it approved when a lot of other lenders had turned it down. And this was not an easy deal. And it took a little bit for us to get it through, but we got it done. We got it done. But it wasn't something that was simple because of everything I mentioned. And also there was an issue with the borrower, Alan. The borrower didn't have a primary residence also. So it was a deal where a lot of things were just not there for a traditional lender, but we were able to find the right funding source for this project rather.
Absolutely. So that is why, the processing team it's busy on every single day. So what we are doing behind the scene is not just processing. We're actually putting our head together to discuss how to get this loan, how to get this loan done, how to get this deal funded, how to get exceptions from the lender to make sense. So, and another deal that we closed, again, this is the deal that we closed in Chicago, Henry's deal. Um, this deal, when they did the appraisal, they found out there's a lot of issue with the property, still need to get fixed, so on and so forth. And also, the lender doesn't like deals like this. But at the end, after discussion, after we provide some idea, and George give them some points saying that hey, if we reserve some of the repair cost, can you get this deal done? So again, George, probably you can talk to them, talk about this one as well. This is also pretty interesting deal.
Yeah, yeah. This was a deal where the gentleman was buying a property, but the property still needed work. It wasn't a lot of work. It was to the tune of maybe around a few $1,000s, but still, a lot of lenders wouldn't close because it seemed like it still needed rehab work. It still wasn't complete.
Right.
We were able to actually get the gentleman the approval, talk to the underwriting committee, basically explain to him, hey, what if we do this? What if we hold back this 5K? So instead of postponing the loan or denying it, why don't we hold this money in reserve? Once the property closes, this guy can actually do the work afterwards, and we'll send an inspector back out to make sure it's done. If you can confirm it's been done, we'll release the money to the guy. So we held some money in escrow, and we're able to close the deal where it needed maintenance, it needed work, and a lot of lenders again wouldn't actually do this. And so we were able to actually get that done. We get that closed. It closed, I think today, Alan, right?
Yep.
It closed today, and so and yes, we were able to actually get it across the finish line, even though there was some hesitation there as well because of certain zoning issues and everything else. And we were again still able to negotiate with the underwriting team, and because of the volume we do with these guys, that's another thing that people don't understand. If another broker was to go to these guys, they may not get the exceptions we get because we do a lot of business with this particular lender. And so the lender was able to actually trust us. And because they treasure our business and the volume that we bring them, they were able to actually make the exception for this borrower. So I think that's the key. That's a big thing because not every broker will have that benefit with this particular lender or other lenders as well.
Absolutely, absolutely. There's a question right here by Mark asking, can we do loans for mobile homes? Now, if the home is on a wheel that can drive around, no, we cannot do that type of deal. But if the mobile home is actually fixed permanently to the ground, yes, we treat it as a regular 1 to 4 unit. Okay. I see Mr. George Taylor has your hands up. George, feel free to ask your
Yeah,
question.
quick question. It might not deal, and it's probably not with what you're talking about now, but I hear the 100,000 being mentioned as your like your marker that you want to keep. Is that the same? Is that true still for things like for factoring also?
No, 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 no. That 100,000 for factoring is a big deal. We are just talking about real estate deals. Okay.
Okay. All right. I
Yep.
just wanted to make sure.
Absolutely. We're just talking about 1 to 4 units.
Okay.
All right. Andre, your hand is still up. Do you still want to ask questions? Okay. If not, anyone else? Anything that you would like to talk? We still have about 10 minutes. So any questions that you might have, feel free. Now, one thing, it, yeah,
Hey, Alan, it's
y-
Dave.
yeah. Hey, Dave, go ahead.
Hey, man, I just got a quick question for you, man. Is there any kind of restrictions on financing of automotive use properties, such as car dealerships or repair facilities?
No, that is actually working capital. We actually funded a mechanic shop 2 months ago. Of course, it depending on what do they use the money for. If you're talking about a car dealership and he's saying, "Hey, give me $100,000, I need to buy vehicles," we cannot do that. But
Right. So I got a potential situation where a dealer is wanting to sell his dealership, and he may have a potential customer. That customer might need financing, but he wants to buy the actual property along with the business.
yes,
So I just wonder if there's any kind of restrictions on automotive use property in of itself.
nope, I mean, again, that is just a business. Then use the business acquisition.
Okay.
We can definitely do that. Yep.
Okay.
So
Sounds
now
good, man.
the trick about this thing is to get it work is the buyer got to be experienced in running a dealership.
Okay.
Okay.
Gotcha.
Jesse, go ahead.
Yes, sir. I apologize for having the camera off, but if I turn the camera on my,
No, you're fine.
okay, excellent. I have a nonprofit that wants to expand their business and they want to use a single family residence to expand into. So right now it's this nonprofit, their building in their facilities are being used is considered a church, but they want that nonprofit organization to actually purchase a home for them to use as part of their expansion. So they're going to use it. They feed the homeless. They allow the homeless to live in that facility, but they want to extend that to purchase
Now,
a home to have more space.
in general, when you're talking about nonprofit, we are in business lending. We are
Right.
lending to for-profit business. So
Understand.
if you're talking about church, nonprofits, so on and so forth, in general, getting a loan is very difficult just because if, for example, if a nonprofit is not able to pay the loan and has to default, a lot of the lender do not have the gut or doesn't have the heart to foreclose on a nonprofit or foreclose on a church. Okay.
Right.
So that's why a lot of and again, because of the structure, so on and so forth. So a lot of the lender do not want to deal with something like this. So the suggestion is if they are buying a single family home to expand the business, the easiest way to do is that for them to set up a regular LLC. Use the LLC to purchase this particular property, and whoever owns the nonprofit, also the owner of the LLC. That way we can get it done like very, very easy. But if you want to use the nonprofit as the owner to purchase this building, it would be quite difficult.
I understand. Okay.
Right.
Thank you, sir.
Okay. Nia is asking, since now we have EXP as partner, does this open up to lending out of the United States? Well, without EXP, we can definitely lend outside of the United States already. But however, it got to be a big deal. It got to be real estate related. And minimum, if you're talking about Turks and other countries, I don't know about Turks, but if you're talking about England, Canada, the loan amount minimum we're looking for is at least 20 million and above. I mean, 20 million is even a small loan for outside. Think about this: you need to move the money outside of the United States, and there's exchange rate, so on and so forth. It costs a lot of money. So if the loan amount is not big enough, it's not going to be attractive enough for the for any lenders to consider. And if you're just talking about, hey, I'm buying a property I'm buying a single family home in Europe, no, that is not something that we can do. Okay. Mike is asking another question: would we be able to help the people that was impacted by Hurricane Helen or other disasters? Give me more specific. How are we going to help? If they need money to repair their homes, I'm sure that we can do cash out, or I think I'm thinking FEMA or the government might have some sort of grant that will come out to help us out, to help them out. But I don't know anything about that yet. But if you're just talking about commercial lending, if they have a property that is damaged, we might be able to put it this way. We might be able to.
Alan, we have a deal in Georgia, a couple of deals in Georgia that are the delay. Right now the storm has delayed the process, so we can still do deals there. It's just but as you can imagine, for example, this appraiser, his family's been affected, and they only have two appraisers in that particular area, and so slow things down. So everything is slowed down in certain areas, but we can still do it. It's just that the process will take a little longer.
Right. Nia said they are looking for 13 billion. Wow, that is a big loan. Yep, love to see it. For big deals like this, it takes a long time. If you really want us to take a look at it, I need well, just give me one thing first. Give me an executive summary. Okay, for a $13 billion deal, I hope that they spend some money to prepare the executive summary so that we understand what they're trying to do. Okay, we love to take a look at it. Cameron saying that I had an interest in Puerto Rico. We need to know what type of deal is it in Puerto Rico. How long does a business need to be in business to apply for 1 to 4 unit? If you're talking about 1 to 4 unit investment property, you don't need a business in operation. All you have to do just today, you set up an LLC. Tomorrow, you use that LLC to purchase it. We actually do not care about how long the business in operation. What we care is that number one, the property need to be under an LLC, held by an LLC. Number two, you just need to have the down payment. That's it. I mean, as long as you can show the down payment, you can set up an LLC anytime and use it to purchase property anytime. Okay. All right. Anyone else? Well, I would like to say it one more time, right? Every Wednesday night we have trainings like this. We love to see everybody. But what I love to see is that we love to send out the paycheck to you guys every Friday. And that's what we do. We pay out every Friday. And I want to see paychecks going out to every single one of you in this room. So make a commitment. You're seeing people making money already. Make a commitment. Bring in at least one deal. Now, where do you find these people? And I said it over and over and over again. If you're out there looking for clients, I suggest you to talk to somebody that you know. It's called a warm market. Those people already trust you. You talk to them. You let them know that now you're in the loan business. You're in the commercial funding business. If you're purchasing investment property, let me know. I can help you. I'm sure that you know investors. Talk to those investors. Join some sort of RIA group, real estate investment group. I'm sure that you have it locally. Let them know that this is something that you can do. That's number one thing. Number two, definitely talk to real estate agents, because real estate agents, all they care is I write the contract, I sell the house, just close that deal. I don't care how you close that deal. As long as that deal is closed, they will make their commissions. So present to them, let them know that we can close deal without looking at without looking at incomes. We can close this deal without looking at W-2s. We can close this deal without looking at DTI, debt to income ratio. All we care is that, hey, as long as you have down payment, we can make this thing work every single time. So talk to real estate agents. And quite frankly, all those deals that submitted to us are real estate agents. I would say majority of them are real estate agents that we partner up with. So please go out there, partner up with them. And for those of you who are talking to Chamber of Commerce, go back to Chamber of Commerce. Let them know that this is something that you can do. And I know a lot of you go to talk to Chamber of Commerce for that wellness program, which is great. But on top of it, add extra service. Let them know that you can fund investment property or any other type of product. Okay. So Damien is asking, are the Wednesday training recorded? Absolutely. Every Wednesday night is recorded. It's on our YouTube channel. Okay. So please, if you don't know where it is, let me show you one more time where it's our YouTube channel. So this is your website. So every single one of us, you are a Sequoia member, you're supposed to have this website right here. So now go all the way down to the website. You see this link right here. Click on the YouTube channel, and this is our YouTube channel. So please subscribe to the YouTube channel. So every time when we have a new video up, you will see it. Okay. Any other questions?
Alan.
Yes, sir. Hey, Din.
Hey, I do have a question about, often I hear you say that they have to have an LLC to move forward. And I wanted to find out if an S corporation or a C corporation would be the same. Okay,
yes.
gotcha.
Yes.
Very
Anything
cool.
that has an EIN number, you can do an LLC,
I thought so.
S corp. You can do it a trust. You can do, as long as it's not personal name. Yes,
okay.
You can do it. But
just wanted to
LLC
confirm.
is the
Thank you.
easiest thing to do, right?
Yes. Okay. Thank you.
Absolutely. Okay. Puerto Rico property, Airbnb home cost $600,000. No, that is too small for us in Puerto Rico. Anything outside of the United States, got to in the millions. Okay. All right, guys. Without further ado, I see you next week, ladies and gentlemen. Thank you so much. Good night.